This is Jay Martin.
This is a public service announcement on why you might want to own some gold. Now, first things first, I am not a gold bug. That is not what I am. I do own gold, and I'm going to tell you why, but I am not some dogmatic evangelical own gold because the world is ending individual. I own equities. I own real estate, residential and commercial. I own crypto. That's doing real well. I'm trying to buy shares in a farm right now. I'm very diverse with how I invest my wealth. But I own gold for some very important and non-negotiable reasons. Now, you might have seen these World Gold Council ads that are circulating around YouTube right now, and they are ridiculous. It's a bunch of, well, it's a super posh family sitting around a very fancy dining room table with their noses in the air, sharing with each other about how and why they buy gold. It is the most unrelatable piece of content I've ever seen when it comes to convincing people that should own gold to maybe consider it. Now, their heart's in the right place. I agree with the mission, but the tactic is terrible. And so I'm going to try a different approach and share why and how I own gold. Now, to begin here, gold is actually a very small part of my net worth. But when the bet is asymmetric, like it is with gold, that's all that you need. I've acquired my gold over the years through passive long-term dollar cost averaging. I have never invested a disruptively large sum of my net worth at any given time. So the opportunity cost spread out over like a week by week basis is probably a bottle of wine. And I don't drink alcohol, so for me, I'm actually not out anything at all. Now, here's an analogy that I'll share before I get into maybe how I leverage my gold, okay? I'm a martial artist, and I learned martial arts in the exact same way I acquired my gold. Let me explain. Combat sports have never been my main focus, but over years, I've consistently invested a small amount of my energy over a long period of time, and the results eventually compounded. Now, through this lens, it's cost me almost nothing to build what has become a significant skill, and possessing this skill has no downside. Like gold, fighting is an asset of very low utility. It's done nothing for me for years at a time. It's given me far less value than my other skills like reading or writing or investing, right? Throughout a decade, there have been almost zero circumstances where I needed to defend myself physically. Almost. But in that rare black swan event where I needed it, the value of that asset skyrocketed, right? I was very glad that I had it. Now, that is asymmetry, right? A small investment with no carrying cost, with an outsized return within a black swan event. Now, looking back through decades of history, gold is the same. There are very few moments when you actually want to own it. But during those moments, typically after prolonged inflation or war, it's about the only thing you want to own. Now, let me back up for a minute because gold isn't only valuable in that black swan once in a lifetime event. Now, recently, I leveraged an amount of my gold in a way that I never thought I would, but it was kind of interesting and put me through a bit of a thought experiment and then real life experiment. So I've been wanting to buy a rental property in the town where I live, right? It's a small city, about 45 minutes away from a big city. There's 20,000 people in the town that I live. But over the last 10 years, or 20, it's consistently been one of the fastest growing cities in Canada. So although small at 20,000, small is all relative, it's growing remarkably fast. And as a consequence, there are several dozens of infrastructure projects that will span the next 15 to 20 years within this town. So the demand for young temporary contract workers to be located here makes me bullish on the rental market. Doesn't make me right, but I wanted to make this bet. However, real estate valuations in this neck of the woods have been bananas over the last few years. So I've been more comfortable sitting on the sidelines and just waiting. But last spring, during the stock market liquidation, I found a seller in distress. So I made a lowball offer, and even my realtor told me to forget about it. She's like, nothing goes for under asking around here. Don't even bother. But I made the offer against her wishes, and I was surprised the same day the seller got back and accepted it without any terms. Now, immediately, obviously, I felt foolish. I should have gone lower, but it is what it is. But due to the unexpected expeditious close, suddenly I was the one squeezed on liquidity. I didn't expect my offer to be accepted and sure didn't expect for it to close so quickly. Now, my positions in the market, like everybody's last spring, were down and I didn't want to sell. So I was a bit short on cash to close this deal. So I tried an experiment. To date, up until that point, gold has been a buy only asset for me. It just goes in the safe, never comes out. I put it aside for future J. But suddenly, real-time J was short on cash and I was looking at an appealing opportunity. Simultaneously, future J had bank reserves. So I decided to ask for a loan. Now I know this is silly to ask yourself for a loan, but I went through the process anyways. Now, the theoretical bank of J was actually not easy to deal with, but after a ton of haggling, the loan was authorized. I was able to lend the money to real-time J from future J at fairly egregious terms. And so I went through the full process. I wrote myself a promissory note to account for the principal ounces borrowed. The loan was made in weighting of gold, not in dollars. So the principal ounces borrowed, some covenants as well, the term of the loan, and in this case, I decided on a flat fee in lieu of interest payments for the loan itself. So I ended up buying the property and I've since repaid the principal in gold with the additional fee of ounces that were due before year's end in order to avoid a default. Now, once again, I know this is kind of a silly experiment, but here's the thing, and maybe you're asking, wouldn't this just have been more convenient if I had put aside cash instead of put aside gold? Then I would just have the cash that I needed, right? My answer is no. A mentor a decade ago told me to become my own bank. And there was absolute utility in the inconvenience of the accessibility to this wealth. It added a layer of criticism to my real estate transaction, which is valuable for someone like me who tends to fire and then aim, all right? It also forced me to set repayment terms that promoted austerity and increased my savings rate for about 8 months. Now, obviously, I didn't have to repay the loan. I could have defaulted on the terms, and there's really no consequential downside. Like, what's the bank of future J gonna come and seize my house? It's not gonna happen. I would have had to deal with some skull-crushing loss of integrity, and that's pretty real, but the tangible downside was quite small. However, there was notable upside. When the terms of the loan were met, the principal borrowed was returned, alongside a significant fee, and my war chest ended up growing faster than the historical annual rate. But more importantly, this process affirmed and enhanced my personal sovereignty, every inch of which promotes better mental health. And that sovereignty, that's why I do all of this, the YouTube channel, the portfolio, all of it. Now, the terms of the loan were so egregious because the future Bank of J perceived this transaction to carry a significant amount of risk. And why? Because real-time J wanted to borrow an asset that you could say is presently valued cheap, being gold, in order to buy an asset that you could argue is presently valued expensive. Now, even though I had a healthy under-asking offer that was accepted, it was my multi-decade time horizon on the real estate that modified this risk enough for me to make the bet. Now, the vulnerable point in this transaction was if the gold market caught before I paid the ounces back, because the loan was made in ounces, not dollars. If the gold market took off, then real-time J, right, would be out a lot more cash than he had initially planned. So this actually gave me a fair amount of anxiety. I actually thought it was going to happen. So this inspired me to pay back the loan ahead of schedule. Now look, this is obviously not investment advice or any kind of advice. I'm not a professional investor and I don't give advice of any kind, right? I'm a merchant. I buy things and I sell things, all right? And here's one way that I have used my gold and why it's valuable to me. I hope you enjoyed this. Thank you for tuning in. I hope you enjoyed this conversation. Now, if you want to take the next step, I publish a weekly newsletter and it's free. There's a link to subscribe right beneath this video, and you can join me and 50,000 other investors weekly for this exclusive content where I share my key action items and takeaways from conversations just like this and plenty others. Thanks for stopping by.